Good afternoon, ladies and gentlemen, and thank you for standing by. Welcome to the Kura Sushi Fiscal Second Quarter 2025 Earnings Conference Call. At this time, all participants have been placed in a listen-only mode, and lines will be open for your questions following the presentation. Please note that this call is being recorded. On the call today, we have Hajime Jimmy Uba, President and Chief Executive Officer, Jeff Uttz, Chief Financial Officer, and Benjamin Porten, Senior Vice President of Investor Relations and System Development. And now I'd like to turn the call over to Mr. Porten. Thank you. You may begin.
Thank you, Operator. Good afternoon, everyone, and thank you all for joining. By now, everyone should have access to our fiscal second quarter 2025 earnings release. It can be found at www.kurasushi.com in the Investor Relations section. A copy of the earnings release has also been included in the 8-K we submitted to the SEC. Before we begin our formal remarks, I need to remind everyone that part of our discussion today will include forward-looking statements as defined under the Private Securities Litigation Reform Act of 1995. These forward-looking statements are not guarantees of future performance, and therefore you should not put undue reliance on them. These statements are also subject to numerous risks and uncertainties that could cause actual results to differ materially from what we expect. We refer all of you to our SEC filings for a more detailed discussion of the risks that could impact our future operating results and financial condition. Also, during today's call, we will discuss certain non-GAAP financial measures which we believe can be useful in evaluating our performance. The presentation of this additional information should not be considered in isolation, nor as a substitute for results prepared in accordance with GAAP, and the reconciliations to comparable GAAP measures are available in our earnings release. With that out of the way, I would like to turn the call over to Jimmy.
Thanks, Ben, and thank you to everyone for joining us today. We had a very productive second quarter, making headway on the new market opportunities represented by our success in Bakersfield, building out our IP pipeline, and beginning testing or rollout of several system projects that have long been in development. New restaurant openings are going exceptionally smoothly, with 11 units opened to date and another 6 under construction. While the inclement weather was an unexpected sales pressure, we are pleased overall with the quarter due to the great progress we made across our initiatives. Total sales for the fiscal second quarter were $64.9 million, representing comparable sales growth of negative 5.3%, with price and mix of 3.2%, offset by negative traffic of 8.5%. We knew coming into the quarter that Q2 would be the most difficult comparison of the year due to the lapping of last year's successful Peanuts IP campaign without an IP collaboration during the current Q2, but this was compounded by the unexpected weather impact we experienced in January and February, with wildfires followed by flooding in Southern California and cold waves across many of our other markets. Cumulatively, we estimate that Q2 weather represented a comp headwind of 400 to 500 basis points. Cost of goods sold as a percentage of sales improved by 90 basis points over the prior year quarter due to pricing and supply chain initiatives. Labor as a percentage of sales increased by 180 basis points due to sales deleverage caused by weather and year-over-year labor inflation. Restaurant level operating profit margin was 17.3% as compared to 19.6% in the prior year due to the previously mentioned sales deleverage. Restaurant openings are proceeding smoothly with 3 new unit openings during the second quarter: Berkeley, California, Fort Worth, Texas, and Paramus, New Jersey. Subsequent to quarter end, we opened units in Scottsdale, Arizona, and Linwood, Washington State. We are very pleased with the performance of this year's openings and believe fiscal 25 has the potential to be one of our strongest classes. In our last call, we have mentioned the success we've seen with our Bakersfield, California restaurant opening, and I'm pleased to report that Bakersfield is performing just as well as when we last spoke. As a reminder, up until Bakersfield, we had only opened restaurants in the top 40 or 50 DMAs. But Bakersfield is significant for us because it represents the 120th largest DMA in the United States, causing us to re-evaluate our previous considerations for what we constitute a viable market. Recent visits to markets like Birmingham, Tulsa, Boise, and Oklahoma City have all supported our early enthusiasm. Along with the greater further space potential, these markets are especially exciting to us as new markets have no impact on cannibalization, which we estimate to be an approximately 4% comp headwind for the current and prior fiscal years. With the progress that our development team is making, we believe that we'll be able to return to a 50-50 split of new and existing markets by fiscal 27, which we believe will serve as a comp tailwind. While the lack of an IP collaboration in the prior quarter made for what we believe to be the most difficult year-over-year comparison in fiscal 25, this pause allowed us to focus our efforts on building a great pipeline, and I'm extremely pleased to say that in fiscal 26, we will not have any gaps between IP collaboration campaigns and expect to have 7 or 8 collaborations, which will be a record for us. We've also been developing our food-focused marketing muscles over the course of this fiscal year, and we are very much looking forward to seeing the combined impact of these campaigns and IP collaborations beginning in May. Lastly, I would like to touch on the progress we've made in system development. The rollout of our new order panel software is proceeding smoothly, and we expect to roll out within the fiscal year. This new order panel software is supplemented by a redesigned push-trigger Mr. Fresh Dome, which is much more intuitive than the current model. This redesign is meaningful as our servers spent several minutes explaining how the old Mr. Fresh model works when we're seeking first-time guests. The new touch panel software includes an optional introduction video for first-time guests, which in conjunction with the updated Mr. Fresh Dome eliminates the need for our servers to go through their intro explanation, which we expect will reduce front-of-house workloads. To coincide with our upcoming IP collaborations, we are rolling out improvements to our pick-up-on system as well. Guests will soon be able to earn their second prize capsule after eating 25 plates instead of the current 30 plates. Considering our average party sizes and per-person plate averages, we believe that 25 plates is a more realistic reach than 30 plates, and that this has the potential to drive ticket growth while also improving guest satisfaction, especially families with 2 children. Finally, I would like to share our progress on what we are most excited about, the reservation system. We began testing in February and have since expanded it to 3 restaurants, including stress testing at one of our highest volume restaurants. The reservation feature has been very well received by guests, and its system-wide rollout is now one of our top priorities due to its potential as a traffic driver. With the old waitlist program, if you have fixed plans like going to see a movie, Kura is off the table because you can't predict how long the line will be or when your actual seating will be. So by giving guests control through reservation slots, our hope is to open up new occasions for guests to visit Kura. Additionally, historical attrition rates for Kura guests in line are between 20% to 25%, and so the ability to capture these guests represents a meaningful comp opportunity. While it's too early for us to provide any quantitative commentary, shoulder period sales did increase with the implementation of the reservation system in Kura Japan's restaurants. Lastly, reservations are accessed through the rewards program, and we are excited to see what the rollout does for membership business ratios. As you can see, we've been very hard at work. Many of these efforts have been long in development, and it's been great to see so many projects bear fruit one after another. I'm deeply grateful for the combined efforts of all of our team members for making this possible. Thank you, everyone. Jeff, I'll hand it over to you to discuss our financial results and liquidity.
Thank you, Jimmy. For the second quarter, total sales were $64.9 million as compared to $57.3 million in the prior year period. Comparable restaurant sales performance compared to the prior year period was negative 5.3%, with regional comps of negative 1.5% in our West Coast market and negative 8% in our Southwest market. Turning now to costs. Food and beverage costs as a percentage of sales were 28.7% compared to 29.6% in the prior year quarter, largely due to pricing and supply chain initiatives. Labor and related costs as a percentage of sales were 34.8% as compared to 33% in the prior year quarter. This increase was largely due to wage increases and sales deleverage. Occupancy and related expenses as a percentage of sales were 7.9% compared to the prior year quarter 6.9% due to sales deleverage. Depreciation and amortization expenses as a percentage of sales were 5.1% as compared to the prior year quarter's 4.7%. Other costs as a percentage of sales were 13.5% as compared to the prior quarter's 14.3%, largely due to lower marketing, travel, and recruiting costs. General and administrative expenses as a percentage of sales were 16.9% as compared to 14.3% in the prior year quarter due to a $2.1 million litigation settlement expense. Operating loss was $4.6 million compared to an operating loss of $1.7 million in the prior year quarter due to sales deleverage and litigation costs. Income tax expense was $38,000 compared to $50,000 in the prior year quarter. Net loss was $3.8 million, or a negative 31 cents per share, compared to a net loss of $1 million, or a negative 9 cents per share in the prior year quarter. Adjusted net loss was $1.7 million, or negative 14 cents per share, compared to adjusted net loss of $1 million, or negative 9 cents per share in the prior year quarter. Restaurant-level operating profit as a percentage of sales was 17.3% compared to 19.6% in the prior year quarter, largely due to sales deleverage. Adjusted EBITDA was $2.7 million as compared to $2.9 million in the prior quarter. Turning now to our cash and our liquidity. At the end of the fiscal second quarter, we had $85.2 million in cash and cash equivalents and no debt. And then lastly, I'd like to reiterate our guidance for fiscal year 2025. We expect total sales to be between $275 and $279 million. We expect to open 14 units, maintaining an annual unit growth rate above 20%, with average net capital expenditures per unit of approximately $2.5 million. And we expect general and administrative expenses as a percentage of sales to be approximately 13.5%. And with all that, I'll now turn it back over to Jimmy.
Thanks, Jeff. This concludes our prepared remarks. We are now happy to answer any questions you have. Operator, please open the line for questions. As a reminder, during the Q&A session, I may answer in Japanese before my response is translated into English.
Thank you. We will now be conducting a question and answer session. If you'd like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 to remove yourself from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we pull for questions. First question is from Andrew Charles from TD Cowen. Please go ahead.
Great, thank you. Wanted to ask just about the performance through the quarter. I think you talked about 400 to 500 basis points of inclement weather and the LA wildfire impact. I mean, did you see that the trend improve from January through February? And if you're able to, speak about kind of if that trend has further improved kind of the March and quarter-to-date time frame as well. Thanks.
Thank you, Andrew, for your first question. Please allow me to answer in Japanese, then if you want to translate. まず、天気回復してから以降の、パフォーマンスに関しては、こういったタイプのニュースがあるまでは非常に順調になって、我々はすごくパフォーマンス、プリーズ、喜んで、満足してました。
はい。Speaking to post-weather, so starting in March, performance has been very smooth. We were very pleased with it. Things are a little uncertain now with the tariff announcements, but up until then, we had remarkably smooth performance. In terms of the monthly cadence, January we had the wildfires, but February we had flooding, and so we didn't see an easing from January to February.
あと1月、2月両方ともコールドウェーブスで、特にテキサスとかイーストコーストを中心にダメージを受けたんで、非常に1月、2月結構大きなダメージ、インパクトを受けたと思ってます。
And then beyond California, both in January and February, there were a lot of cold waves that impacted Texas and our Northeast restaurants, and so there was pretty meaningful weather pressure across both January and February.
Okay, that's helpful. And then, Jeff, I wanted to ask about the margins. In the last call, you talked about 20% restaurant-level operating profit margin could be achievable in 25, as well as labor leverage. Is that still on the table?
まずレーバーに関して私の方からお答えさせてもらいますと、レーバーに関して我々一番最初の 20% のところ、まず今回の最後のニュースがなければこの 20% っていうのは、きちんと今の Q2 の状況を受けても達成できるというふうには思ってたんですけど、今現在非常に不安定な状態になってますので、引き続き 20% を目指すことは変わりませんけれども、不透明さが増したということだけをお伝えしておきたいと思いますと。まずちょっとレーバーのことはその後で答えます。
はい。In terms of the 20% margins, through March, we were very, very confident that we'd be able to maintain that 20% margin for the full year. That being said, we're seeing a lot more uncertainty with tariffs, and so we have less visibility into that 20%, but that absolutely remains our goal.
レーバーに関しては、基本的に我々がちょっと最初、クォーターというか、フィスカルイヤーの初めで言ったのは、ローシングルデジットの、レーバーインフレーションを考えたんですけど、今現在ハイシングルデジットになってしまっているんで、ちょっと Q3 以降も、セールスのダメージを受けなければ、昨年と同じレベルまで回復できると思うんですけど、昨年と比べてベターっていうところまでちょっと難しいかなと思います。一方で、いろいろタッチパネルとかミスターフレッシュの改良があるんで、できる限りしっかり改良していきたいなと思っています。
はい。We came into the year expecting lower labor inflation than what we've actually seen. Our expectation was low to mid-single digits. What we've seen to date is high single digits. If we see no impact if the tariffs have no impact on consumer confidence and there's no change in behavior, then we remain confident that labor would largely be in line year over year. Now with the uncertainty, levering year over year, it's a bigger hurdle.
できればですけども、タッチパネルのアップデートとかそういうところでしっかり改善していると思っています。
That being said, we do have a lot of levers that are unique to ourselves, mainly through our tech initiatives, whether it would be our new Mr. Fresh, our touch panels, or greater sales leverage to increase traffic from the reservation system.
Great, thank you. I'll pass it off.
Thank you, Andrew.
Thank you, Andrew.
Our next question is from Jeffrey Bernstein from Barclays. Please go ahead.
Great. Thank you very much. First question is just on the broader consumer. I know at ICR in mid-January you talked about the consumer being in a much better place. And I know you mentioned just now that the weather was a 400 to 500 basis point headwind. I'm just wondering whether there's any concern that maybe what appears to be in part weather is actually the masking of maybe an underlying slowdown in consumer spending. Sounds like you don't believe that was the case through March, but maybe something's changed in April. So just trying to get a sense or how to gauge your confidence that you really, up until most recently, haven't seen any change in consumer behavior when others seem to be talking about perhaps a slowing consumer spending environment. Just wondering what metrics you look at just to give you that level of confidence. And then I had one follow-up.
ウェザーのあれが終わった後での我々すごく3月特に満足したんですけれども、この1週間のところでいくと、やはりこの新潟のニュースとか市場のストックマーケットの影響とかがあって、 やっぱりちょっとコンスーマーのセンチメントの影響を受けるかなということをいうふうに思っています。なんで、今回のガイダンス、我々レベルにアップデートしてないんですけど、そういった影響があることを予想した上で、我々、ガイダンスを、アップグレードするのに引き継いだ、なんていうか、そのままだというふうに経緯があります。
Looking to Q2, beyond the weather, we were also lapping peanuts without an IP campaign, and so we knew that it was going to be the toughest comparison, and we don't interpret it as a slowdown of the consumer or our consumer whatsoever, especially given the performance that we saw in March. Now that we're in April, post the tariff announcements, I mean, people's retirement accounts are being impacted with the stock market taking a hit, and so there's just generally more uncertainty, and that would be the biggest reason that we didn't raise guidance for this quarter. But we don't think that it's big to us.
Understood. And then just to follow up, you mentioned the tariffs, and it seems like you're referring to it in regards to a consumer headwind seemingly having pressure on markets and consumer confidence. Just wondering, as you think about it from a cost side of things, I know in the past when I asked you, you've talked about how you have somewhat supply chain geographical diversity and your ability to pivot. I'm just wondering how you think about your specific supply chain. Seemingly, some products could potentially be coming from overseas. So just wondering how you think about the tariff implications on your actual cost side of the business. Thank you.
Yeah, Jeff. Hey, Jeff, it's Jeff. So, everybody's been doing, we've been using the last several days kind of scrambling to figure out, what the implementation of these tariffs are going to have and what impact it's going to have on our business. And the answer, really, the short answer right now is that we really don't know yet, as we haven't had a chance to meet with our main suppliers and really figure out or determine how much of these tariffs they're going to be passing along to us. And on a pretty encouraging note, even though we haven't had in-depth conversations with them, a couple of our top suppliers have already given us preliminary indication that they would be willing to share the impact of these tariffs with us to some extent, but like I said, it's only been about a week, so we haven't been able to sit down with them and determine what that looks like. In terms of our overseas purchases, we know that when we look at our top purchases as it relates to overseas, Japan is one of the top countries of origin in our supply chain. And something that's very encouraging to us is we also know that the Prime Minister of Japan has expressed his willingness to come over and meet with President Trump to negotiate these tariffs, and we're hopeful that that's going to happen sometime in the near future. And also, to a lesser extent, we purchased from Vietnam, and when the first news came out, I think Vietnam was one of the very first countries to come out and say that they were interested in negotiating. So a couple of the countries that we do purchase from overseas seem very willing to come to the table. So the negative news of the tariffs coming out, we have received a few positive bits of information as it relates to our suppliers that we hope that once we get these lined up, will mitigate the impact to our company in the future.
Understood. That's very helpful. And just to clarify, I think you mentioned, if not for April, or the April uncertainty has led you to keep your sales guidance as is rather than raising it, which is encouraging. I'm just wondering, does that therefore mean you still kind of reiterate your expectation for positive comps for full year 25, barring any significant change in consumer behavior?
もちろん今回の、ニュースがある前は、我々ポリティのコンポフルイヤーでっていうことですごく自信があってました。IP もね、5月以降ありますから自信あったんですけど、非常にアンサートル発してるんで、今のところはそこは確約っていうことはコミットはできないですけども、それを目指してしっかり頑張っていきたいと思ってます。特に5月以降 IP ありますし、リザベーション売上の効果とかもありますし、25サラメートもありますんで、いくつかね、我々レバーありますから、いまだにゴールであることは変わりない。
So Jeff, I think the key word is you kind of said it, barring any major changes in consumer behavior. If there are no changes in consumer behavior, absolutely we remain confident that we can post positive comps for the full year. We've got a lot to look forward to. We've got strong IPs lined up from May onward through the end of the year. We have sales tailwinds coming online with the reservation system. And so if there is no change to consumer behavior, then certainly we expect to be able to maintain positive comps or to achieve positive comps for the year. But that is, far from a certainty at this point in terms of whether or not consumers are going to change their behavior. And so we are not upgrading guidance at this point.
Thank you.
Thank you.
Our next question is from Jeremy Hamblin from Craig-Hallum. Please go ahead.
Thanks. I wanted to come back to clarify the food basket and sourcing. Of your total food basket, what portion is domestically sourced, or kind of the range that's domestically sourced versus sourced overseas?
So we haven't stated those numbers yet, but I will tell you, Jeremy, that one of your colleagues, sell-side analysts on this call, put out a report a couple days ago that estimated him, and I will say that he is in the ballpark if you take a look at that.
Okay. And then I wanted to come back to the comments on wage pressure and just get an understanding of, the commentary about high single-digit, wage pressure. Is that being driven by California or other geographies? Given that you're lapping FAST Act here, it's a bit of a surprise that the pressure is quite that high. Now, certainly the employment dynamic may change. There may be more labor supply here in coming months, but wanted to see if you could provide a bit more color.
Sure. まず、全域でこう上がっているということです。これは、法律によって見極め違ったというのもありますし、そうではなくて、やはり従業員さんを確保するために自発的に上げているというところもあって、全域でそういったことが起こっているということです。
Yeah, this is not a California issue or anything related to the FAST Act. This is something that we're seeing across markets, whether it's because of statutory minimum wages. We're seeing some come online as of July 1st as well, which was not the case in past years. And then just being competitive with the market. So this isn't a California issue.
しっかりね、時給を上げてでも従業員さん確保して、で、今、水面下でいくつかテックのイニシアチブでやって、人件費削減できるね、将来に向けての対策がありますから、それをしっかりできることで、将来的に抑えていくことを狙っています。
We think it's always important to invest in our team and make sure that we have best-in-class people representing ourselves at the restaurants. At the same time, we push ourselves as much as possible to work on these system initiatives so that we can keep our man hours at a minimum.
Got it. And then lastly, just want to come back to the cadence of new unit openings. So you've opened 11 year to date. I think you have, another 6 or 7 maybe in the pipeline. I know not all of those will get completed in FY25, but do you expect any more to be opened in Q2? I'm sorry, in fiscal Q3? And then, just in terms of, thinking about the timing of when things might open in your fourth quarter, I know that, in Q2, all of the openings happened in February. So even though you got 3 opened, I wanted to just understand what the revenue contribution was, given that I think from an operating week perspective, you only had like 5 or 6 operating weeks in which you had new units opened in that quarter.
まず Q3 に関しては1店舗オープンできるというふうに思っています。これはもうすでにオープニング数が出てますので、近い将来にオープンできると思っています。で Q3 はその1店舗だけで、Q4 に関しては今現在、まだ14店舗のガイダンス立ってますから2店舗のオープン予定してますけど、もし次の月までに、次のマーニングスコールまでに開けれるようなことがあったらアップデートすると。今現在では、やっぱりちょっともう少しモールの中での、工事とかもあって、まだ2店舗しか、Q4 の2店舗しか今のところはちょっと確約できないです。言えないです。
So we've got one more scheduled opening for Q3. If you go on our website, you can see that we already have the opening soon language up, and so that should be opening soon. In terms of Q4, we haven't updated our 14 guidance. We're very comfortable with being able to open 2 units. Should we be able to open both of those prior to the July call, that would be an opportunity for us to, provide an update to guidance on the unit front. Right now, it's just construction is happening in one of the constructions in a mall, and so that there's a level of uncertainty in terms of construction duration there. It's specifically it's in a food court. We're sort of like the centerpiece of the food court, but we've never had to do construction under those constraints before. Obviously, they're not shutting down the food court to let us build our restaurant.
Yeah, it's all overnight construction in that restaurant, so it takes a little bit longer.
Great. Thanks so much for the questions, taking the questions, and good luck.
Thank you.
Next question is from Matt Curtis from William Blair. Please go ahead.
Thanks. Good afternoon. I wanted to get back to the revenue guidance for a minute. Could you tell us what second half comp expectations you have embedded to get to the full year revenue guide?
まず、今現在、非常にアンサートニーが増しているところで、コンプの、我々もともとコンプガイドになっている中で、今現在ちょっとコンプを言うのは非常に難しいと思ってます。ただし、レベニューガイダンスにすべて、我々、オープニング、早めにオープンに行ってますし、あと、ここ最近のオープンが調子いい。けれども、アンサートニーを含めて、今、ガイダンスを据え置きしているということで、大体のところをさせていただければと思います。今、多分どのレストランもちょっとコンプをガイドするのは非常に難しいと思います。
Given that we generally don't give comp guidance, with the increased uncertainty, this is certainly not easier for us to give comp guidance. But the revenue guidance does reflect our assumptions, both in terms of the accelerated openings that we've seen. A lot of the fiscal 25 openings outperforming our expectations, reflecting Jimmy's comments about it having the potential to be one of our strongest classes ever. But yeah, we think you could be able to back out or back into our comp expectations from the revenue guidance that we've presented in conjunction with the commentary on the unit openings we just did.
Okay, got it. Thanks. And I guess switching to something else, you mentioned some of the IP collabs will be starting in May. Could you give us any details around exactly what you have planned on the IP front in the second half of the year?
Yeah, so the IP pipeline that we've been building is really the main thing that we were trying to change was having unsuccessful IPs. And so what we built out is we have some of our best ever hits from the past coming up. So we've got, Demon Slayer, we have One Piece, we have Peanuts, and then we've been developing our relationship with Nintendo. So we have Kirby, which is one of their major mascot characters, coming up in fiscal 26. I'm personally a big Kirby fan. I'm extremely excited. I can't share anything else in terms of the fiscal 26 pipeline, but we're very excited. As Jimmy shared in the opening remarks, we have 7 or 8 planned for fiscal 26. It's a big part of our strategy.
Okay, sounds good. Thanks.
Thank you, Matt.
Next question is from Mark Smith from Lake Street Capital. Please go ahead.
Hi, guys. First question, sorry if I missed it. Does the G&A guidance include the litigation expense?
Yeah, the guidance, we haven't changed our guidance as it relates to the litigation expense being part of that number.
It is part of it. Okay, perfect. And then the second one for me, just as we think about tariffs and kind of build out, any idea outside of operations, maybe incremental costs on build out of new restaurants at this point, especially any special equipment that you may be importing?
Sure. もちろん、我々、日本、中国からエクイプメントを輸入しているものがあるので、ビルドアウトコストの影響を受けますと。で、我々イニシャルスタディでよると、最大で400件ぐらい影響を受けると思ってますけど、現実的、もし仮にね、そこまでして言ってくれるかな。
はい。So we do bring in a certain amount of special equipment from overseas, mostly Japan and China. Our initial estimate in terms of incremental costs as it relates to the tariffs, we think in a worst case scenario would be about $400,000.
ですよ、結論としてはですね、今現時点では、この、コンストラクションのコストのインクリースを想定しても 20% のユニットグレースっていうのはしっかり維持していきたいなと思ってます。
That being said, even with the potential increase in build-out costs, this doesn't change our thinking at all in terms of our desire to maintain a 20% plus unit growth rate.
今現在我々 AUV が4ミリオンで、レストランレベルが 20% で、ビルドアウトが 2.5 で、それで3イヤーペイバックですけども、最初400までいかなくてもしいろんなイニシアチブをやって、300K の上昇になったとしても、もしユニットレベルのモデルが変わらなければ、3イヤーカーブでいけますから、我々今100ミリオンキャッシュがある状態で、この前、リボルバーの45をエクステンドしたばっかりですので、十分、20% 維持できるというふうに考えています。非常にファイナンシャル的には全く問題ないと思っています。
As a refresher, we have AUVs of $4 million, our restaurant level operating profit margins of 20% against build-out costs of $2.5 million, get us to cash-on-cash returns of 33%. We just mentioned the worst-case scenario would be a $400,000 increase. We think a $300,000 increase is more realistic. That only changes the unit economics equation by half a year in terms of payback period, and so it really doesn't change our appetite at all. We have $100 million in cash and long-term investments. We just renewed our revolver with the parent company, with Kura Japan, for $45 million, and so we're in a very strong capital position, and we're excited to be able to make decisions based off of what are in the long-term best interest of the company.
Great. Thank you, guys.
Thank you.
As a reminder, if you'd like to ask a question, it is star one. Next question here is from JP Wellham from Roth Capital Partners. Please go ahead.
Great. Thanks for taking my questions, guys. Maybe if we could start sort of on the leverage on your side, understanding that the consumer environment is uncertain and certainly rapidly changing. But I was just hoping we could talk, one, on the reservation system. Did you give a timeline of when you would expect that to be fully rolled out? And then two, can you just talk about kind of the marketing and maybe more also with the loyalty program? You know, what else can you kind of do there to help drive volume from your loyalty members?
Yeah. So what we've shared publicly is that we expect to be able to roll out the reservation system-wide by the end of the fiscal year. Our goal is faster. We definitely want to be able to capture the leverage of seasonality that we see in Q4, and so that is one of our top priorities to achieve kind of full system online. In terms of the reward system or the rewards program, there are a couple things that we're really excited about. The first is that the reservation system is accessed through the reward system, and so we know that's going to be a pretty meaningful catalyst in terms of registrations. And as we've discussed on past calls, rewards members are very valuable both in terms of frequency and spend. And so on that note, with the IPs that we have coming up, we know that we can do a lot of different things. We've got giveaways and stuff like that like we've done in the past, and those are very meaningful levers for us.
Okay, understood. And then the second one would just be maybe more on a competitive note. I don't know how much kind of visibility you guys have, but any high-level thoughts about some of your competitors and maybe, how the tariffs might impact their business and more specifically kind of their pricing structure and what it means kind of for the value delta that Kura provides relative to some of your competitors out there?
今回、これ我々が一番強調したのはそこなんですけども、今回の関税って本当衝撃的で我々は驚いたんですけども、アメリカのお寿司店、全部同じ状況を受けていた。その中で我々は中長期的にはすごくベネフィットを受けるように持っていけるんじゃないかなと思っています。これからちょっと理由を説明します。
We appreciate you bringing this up. As shocked as we were by the magnitude of the tariffs, we're certain that every other mom-and-pop sushi restaurant was just as shocked, if not more shocked. And as you probably guessed, we're in a much better position than them, and we believe that we can turn this into a competitive advantage and further widen the delta in terms of value between ourselves and the typical sushi restaurant.
まず我々100ミリオンあって、45ミリオンのリボルブをやったばっかりで、体系的に非常に有利なところでありますと。それプラスフードベンダーとのやっぱ交渉もバイングパワーがあってすごく強い一例が出ますと。で、ジェフが先ほど言ったみたいにもうすでに彼らある程度カバーしてくれるというインディケートしてきたところがあるんで、その辺比べると本当にすごく彼らと比べて有利なポジションがあると思います。それプラスいろいろ先ほどベンが言ったみたいなリザベーションとかタッチパネルとかミスタープレスとかいろんなテックイニシアチブがあってまだまだ改良の余地があると。その辺ですごく全然違うと思います。はい、まだあるけど。
So the first would be that we're in a very strong cash position. As just mentioned, we've got $100 million on the balance sheet, access to another $45 million revolver, and so we're not in the same position as a mom and pop where they need to be making decisions about, keeping the lights on and operational stuff like that. We can really make decisions that are in terms of the best long-term strategy. As Jeff had spoken to earlier, our vendors are already coming to the table indicating that they want to work with us. Our buying power is orders of magnitude larger than the typical sushi restaurant. We're probably one of the biggest fish buyers in the country. And so that is something that is very different for us versus any of our competitors. And the last would just be all of the things that are unique to us, whether it's the new initiatives that we're talking about, the IP collaborations, the experientiality, all of those will continue to work in our favor.
あとは、レストランオペレティングプロフィットマージンも、これ20% 以上維持してますから、もし仮にね、短期的に少し下がってももう全然致命的じゃないということがありますので、総合的に短期的な業績ではなくて、中長期的に、視点で、彼らにとって正しい選択できるような、十分な時間を使うことができるというのは非常に有利だと思っています。
Our restaurant level operating profit margins, generally speaking, are above 20% or amazing. We're really happy with them. And so if there's some short-term pressure on it, that's something that we can tolerate. We're able to make decisions that are, not looking at the short term, but really the long term. And we're very grateful to have that strategic flexibility.
なので、最初のと寿司店との価格優位性は、広げていけるというふうに思っていると、この環境終わった後、広げていける、乗り切った後広げていけると思っているということです。
To return to your initial question, absolutely, we think this is going to be a catalyst for widening of the value delta between ourselves and competitors, and the value proposition will be stronger than ever.
Understood. Thank you for the detail. Still luck going forward.
Thank you, JP.
Next question is from Todd Brooks from Benchmark Company. Please go ahead.
Hey, thanks for taking my questions. Only a couple left here. If we can talk IP partnership, I think you said the timing for the next one starts in May. And at one point, I think you were talking about 1 in Q3 and 1 to 2 in Q4. Does that imply when we get to May, we're running under IP partnerships for the balance of the fiscal year?
Yes.
Okay, great. And then I know when you talked about the pivot off of the kind of the 6 scheduled IP partnership cadence, there was a desire to really focus on the more impactful partnerships. A little surprised and encouraged to hear about 7 to 8 collaborations next year. Is the threshold and the hurdle of impactful still in place where
absolutely
go ahead.
We're very, very happy with the work that the marketing team has been doing. Q2 was a difficult comparison, but that bought them the time to be able to put together this amazing IP pipeline, and so we think it was absolutely the right investment to make.
Okay, and then at kind of 6-week durations, are we pretty much always on then as we think about fiscal 26 from an IP partnership?
My guess at this point is that we'll probably have a couple 1-month collaborations, and that's how we get beyond the 6 collaborations per year that we've done historically.
Okay, perfect, thanks. And then the other one was just a follow-up on the reservation system. I think you said you're in test now in 3 units, and at least one of the ones in test is one of the really higher volume units. Just wondering, and not looking for quantification, but the consistency of the lifts that you're seeing from the system, either relative to your expectation or relative to what Kura Japan saw when they implemented it. The consistency of lifts that you're seeing and how that's fueling the desire to get this rolled out even more quickly than the end of the fiscal year, and is the bandwidth there to really, I don't know how fast you can roll these out now that you've tested in 3. Is this still a iterative process where you go to another 5 stores but what's the unlock to kind of hit the year-end goal for the reservation system?
Yeah, so to start in terms of guest response, so the high volume restaurant that we referred to was Austin. I was there for the first week that we launched it in Austin. Because this isn't system-wide yet, the only marketing that we've been able to do is through the rewards program. If you set your favorite restaurant as, say, Austin, then you would have gotten an email saying, we now have reservations. And, I was watching all the guests coming in, and it seemed like the first day it was a quarter to a third of people were coming in holding up their phones with their reservation numbers. I was genuinely blown away. By that weekend, it was really like every other party had a reservation. And so for these restaurants that are super busy, that have long lines, the value is immediately obvious to our guests. And so that got us that much more excited, made it really clear to us that there's a concrete upside that we could expect, and that's one of the other reasons that we're putting everything that we can into accelerating rollout. In terms of the unlocks, I'd say that the biggest parts are behind us. It was really just getting tech stability and making sure that we're able to figure out an operational flow that made sense, and that's largely been hammered down. And so now it's we're breaking up into teams, and we're going to be having simultaneous rollouts across the country.
Okay, great. Thanks, Ben. Appreciate it.
Of course.
The next question is from Jim Sanderson from Northcoast Research. Please go ahead.
Hey, thanks for the questions. Wanted to go back to the quarterly performance. Did you break down same-store sales between traffic, price, and mix, or could you?
Yeah, we can. So total comp was minus 5.3, and that was minus 8.5% traffic and 3.2% price and mix.
All right. And again, March was a meaningful improvement over that trend on the traffic line. Is that the right way to look at it?
もちろん先ほど言ったみたいに天気の回復後、客足が回復してるんですけど、実は街は、我々、すごくコンプが昨年強かったところがあるんで、タフなコンパリズンになることは変わりないんで、ただ、客足は回復していることだけは、満足していることだけお伝えします。
In terms of performance and looking at it on an absolute basis, we're very pleased with March performance. That being said, if we're talking about comps, last year's March was strong enough that it was so strong that that's really what prompted our revenue guide raise last year. And so March is really a tough month to compare ourselves against, but X that, we were very, very happy with March.
All right. And then a question on unit development. Can you provide a little bit more insight on what your development pipeline is looking like in the United States beyond fiscal 25? Maybe indications of lease signings or sites you've identified, anything that would give us a sense of commitment you've got beyond the current fiscal year?
26年以降も先ほど言ったみたいに 20% 以上維持していくということと、27以降はできれば 50/50 ニューのエグゼクティングも目指していくというのが我々の大きな方向性です。それに今回のことがあっても変わりがありませんと、ニュースがあっても変わりがありません。
So generally speaking, you could assume that the foreseeable future, we're going to maintain that 20% plus unit growth rate. For fiscal 27, we expect to be able to get back to that 50/50 split between existing and new markets. And the confidence behind that statement comes with, the number of LOIs that we have under negotiation and the number of leases that we already have executed.
All right. And just one last question on tariffs. Is it possible for you to move to a U.S.-only supply chain to source input costs over the next year, let's say?
残念ながらちょっと全部を米国製っていうのはちょっと現実的ではないと思うんですけども、ただこれから何ヶ月間か、先ほどジェフが言ったみたいに、各政府のネゴシエーションの様子を見ながら、関税が下がっていたところに移していくってことは可能だと思います。ただやっぱり我々もある程度数ヶ月間まとめてオーダーするんで、そういったシフトっていうのは一気にじゃなくて、徐々にシフトしていくだろうと思ってます。
It would probably be difficult to shift entirely to domestic. I mean, you can't catch tuna in Lake Erie, so there's just geographic, biological limitations there. But what we can do is we can adjust between different supplier countries, and so we're going to be keeping a very close eye over how the tariffs shake out over the coming months. And if there are countries that we're currently working with that are less advantageous, and there are options for ingredients of comparable quality, better tariff rates, then certainly that's something that we pursue.
我々が個人店と比べて有利なところは、我々がメーカーのところと交渉して、例えば関税が低いところの交渉して、これをベンダーに持っていってくれということ交渉ができるけれども、個人のところはベンダーが持っているところのチョイスからしか選べない。そこが我々のこれから中長期でベネフィット発揮できるところだと思っています。
One thing that we've been working over the last couple of years that is going to become critically important now is our relationships, not with just our broadline suppliers, but with the direct vendors. Our supply chain team goes to, they're traveling across the world, negotiating directly with the providers. And so it's a very different situation from a mom and pop where they have their options are limited to what the broadliner is offering. We bring what we want to the broadliner. And so again, it's just a completely different story in terms of economies of scale. And as unfortunate as this is going to hurt our competitors a lot more than it's going to hurt us.
Understood. Thank you very much.
This concludes the question and answer session as well as today's teleconference. Thank you for your participation. You may disconnect your lines at this time.